I don't think the Australian government will look to give up too much in that space, whether it's biosecurity around beef, whether it's the Pharmaceutical Benefits Scheme, increasing defence spending. They're all sensitive issues. So I think the Australian government will be looking to do a deal, but not at any cost, and they won't be in a rush.
How do you view the outcome of the US-China trade talks? Was it a temporary truce or a negotiated outcome?
Yeah, it's a very interesting question. I think what we're seeing in the US and China relationship is a few things. On the one hand, we're seeing an ongoing discussion and dialogue, which is a very positive thing for the global economy. The fact that they're talking as two superpowers in the global economy is a really positive thing. They've both shown that they have what I would call an economic pain threshold they don't want to cross. For a while there in the early stages of this trade war, it looked like we could see a complete decoupling between the US and China when tariffs were sitting at over 150%. That would have been a really severe outcome for the global economy and probably driven the global economy into recession. So the fact that they're avoiding that and they're continuing to talk is a real positive. On the other hand, I don't think we're seeing a high degree of trust between the two economies. And I think what we're going to see is a continued set of escalation and de-escalation in the relationship and ongoing tensions. I don't think the prospects for a really meaningful, comprehensive trade deal in the near term are high. But it's good that they're talking, and that helps take some of the pressure out of the global economy.
Some might say that these talks illustrate a lack of foresight from the US. The fact that it backed itself into a corner on China's rare earths, a commodity it does require for its own strategic interests. What does that say about the strength of the US hand in negotiating the deals it wants to see?
Yeah, I think fundamentally the US economy is still a big drawcard for all countries globally. So they still have significant weight, but I do think there was a sense of overreach in the early stages of this trade war by the president that has weakened his negotiating hand. But when you look at the relationship between China and the US at a deeper level, I think what this trade war has shown is that to date they still need each other. Both economies are still reliant on the other. The US still needs Chinese imports for much of its critical supply chains, and China still needs US demand to help support its export machine. In the longer term, I think you will see both economies continuing to push for more economic independence, but for now they still need each other.
And so what are the lessons for Australia in trying to maximise its own leverage in the talks that are yet to happen with the United States?
I think for Australia, they'll certainly look to do a deal if they can. We know that the Prime Minister's looking to meet with President Trump on the margins of the G7 meeting. But on the other hand, there's probably not a great rush for the Australian government to try and land a trade deal. The tariff we're facing at 10% is the lowest any country is facing globally and shouldn't do a lot of damage to our economy in a direct sense. There are opportunities in critical minerals where we could seek greater partnership with the US, particularly in the form of more investment in our domestic industry or long-term offtake agreements. But the areas that the US will be looking for progress from Australia are very sensitive politically, and I don't think the Australian government will look to give up too much in that space, whether it's biosecurity around beef, whether it's the Pharmaceutical Benefits Scheme, increasing defence spending. They're all sensitive issues. So I think the Australian government will be looking to do a deal, but not at any cost, and they won't be in a rush.
What about being wedged on China? Do you see that as a real possibility? China came up in the UK-US tariff talks.
I think in those areas of strategic interest like critical minerals, there will be tension points and friction points for Australia. We've been managing those tensions for some time in this country, balancing that trade relationship with China with a strategic alliance with the US. I think those pressures will become more acute going forward, but I think in terms of the trade deal itself, we can probably navigate those tensions for now.
We've seen data this week illustrating how US tariffs are slowing China's exports. Would you expect that that slowdown is already having ramifications for Australia's own economy?
To a point. I think it's still quite early days. We've seen this trade war kick off in April and May. We're only now seeing some of the hard data come through, and it's been a bit of a mixed bag. We've seen some really quite weak outcomes in terms of the data, and we've seen some that have been more positive. We saw a stronger labour market outcome, for example, in the US in the last few days. So it's still a bit early to tell exactly how big that impact is going to be, and I don't think we've yet seen much of the flow through to Australia directly, but it's particularly the Chinese economy that we'll be watching closely, and whether or not the Chinese authorities step in with a broader stimulus package to buffer and support their economy.
Do you think that slowdown in China will make the Reserve Bank's deliberations in July any easier?
I'm not sure it makes it easier. It certainly will be a factor for them. I think we saw a really noticeable shift in tone from the Reserve Bank at their May meeting when they cut rates by 25 basis points. They've been very cautious. They've been wanting to see inflation come down into the target band, not wanting to get ahead of themselves in that debate. Now they've seen that move into the band. They're focused more on those downside risks, whether it's the global economy or some of the weakness in consumption that we've seen here in Australia. So I think they're looking at a more balanced picture now, and there's a strong case to move back towards a neutral interest rate a little more quickly. We still think that we'll see a further rate cut in August and then again in September, but the July meeting is certainly live. And if we were to see those international factors turn down more severely in the upcoming data, that would play into their calculations.
Okay, Luke Yeaman, good to talk to you again.
Great to be here. Thank you.